While many investors believe that I am somewhat of a perma bear and I just want the world to end and I'm not bullish on any stocks or any sectors, I said that many times that this is not true. I am bearish on the stock market in general because I see the facts that actually show me that I have to be more defensive in my portfolio, and I'm still defensive in my portfolio. I'm not buying ARK Innovation. I'm not buying anything that's very risky at the moment. But I did share my strategy with you in two previous videos where I talked about buying things that people hate and sell them when people love them. And I do implement this strategy no matter where the S&P 500 is, as we are emotional people and emotions overreact to the upside and especially to the downside, where they sell assets that are, pretty good, and maybe they reported bad earnings, for example, a 10% decline, but the stock goes down 30-40% because maybe they, not giving guidance anymore and investors want guidance. There's plenty of opportunities all the time. But I do have long positions that I'm holding for the next 5, 10, 15 years that I personally not going to sell no matter where the S&P 500 is and no matter what happens in the world. And those are the sectors that I'm bullish on for the future, as I believe the future is very uncertain and it's not going to be like what we had in 2008, it's straight up on the S&P 500 where you buy growth stocks and you hold, for a long time and then it goes up, 2,000-3,000% and then you're fine. I believe it's going to be much more difficult than that, and it will require some market timing and some, plenty of other skills that you didn't need in 2008 and 2009 till 2020. But I believe there are still some sectors that can actually be buy and holds for a long time, in my personal opinion, that could do amazingly well in the future, not just because of good fundamentals, but because of some macro factors that will really help them. And this is what I do in my strategy. I find something that's undervalued, and then I make sure the macro environment is right for this specific asset, in my opinion. And I believe we could have something like what we had in the 1970s, where we had 15 to 20 years of no returns in the S&P 500. Yes, we did have the S&P going up, but if you adjust it to inflation in real terms, the S&P did nothing for 15, 16 years, which is why many people are celebrating this rally and are forgetting that inflation is coming back in many assets. Lumber is up 23% in 1 month. Rubber, potatoes are up 7-8% in a month. And, inflation is coming back. That means those returns you're celebrating in the market are not as good as you think. And in the 1970s, it was very choppy because inflation was coming down like what's happening right now. The Fed was starting to loosen. Maybe they cut rates and then inflation came back. They had to raise them again. And then the growth stocks were all over the place, up and down. And their business was highly affected by either the stimulus when they put it in or whenever they take it out. But the best performing asset classes in the 70s were energy stocks in real terms and other type of stocks that are necessities. And this is what I have in my portfolio. I am positioning myself in industries that will do well no matter what, and there's plenty of those industries. One of them is defense. You have other consumer staples, you have energy stocks, you have plenty of other type of stocks. For example, I share some ideas on Twitter. For example, AutoZone is going to do well no matter what. The stocks sold up 5-6%, I believe, around 10% from the peak, because investors are just jumping on the growth type of names while forgetting those type of names that do well no matter what. Now, why do I want something that do well no matter what? Because I want them to have the free cash flow to buy back stock, pay down debt, and actually provide value to shareholders like the energy stocks can actually do. Now, if you have a cyclical type of stock, you're holding it for 10 years, maybe an airline or maybe a casino, we're going to have boom and bust in the economy, and this company is not going to have a stable free cash flow for them to return value to you as a shareholder. But whenever you have a company that does well no matter what, maybe like the defense stocks like Lockheed Martin, which I still don't own, I'm waiting for a somewhat of a pullback to actually own the name, but such companies can have the free cash flow to buy back stock when their stock is cheap, to return value to you as a shareholder. And because they have a more stable business model in a choppy environment, I believe they are going to get a multiple expansion above the tech stocks that we're used to in the past 10 years, like Google and Amazon. I still like Google and I like some other type of tech names, but I don't believe it's going to be the same as it was in the previous 10 years. Now, one of the first industries that I'm bullish on, and it doesn't really fit this category, but I've been bullish on this industry for a while, and it's actually the gold mining stocks, and they performed amazingly well in the 70s. Some of it had to do, of course, with the dollar going off the gold standard and then gold trading on freely and stuff. But I believe we could have some type of a repeat, and it's already happening in my personal opinion. As inflation comes back and then goes out and it comes back, eventually the Fed is going to lose credibility, and you have other central banks around the world buying gold at a record pace to try to take themselves off the dollar. And all those geopolitical issues and other type of issues with inflation is a perfect cocktail for these gold and junior gold miners to actually perform amazingly well. Now, I couldn't find a chart of the junior gold miners, but most of them returned over 1,000%, 2, 3, sometimes 13,000% in the mania from 1979 to 1980. But in this whole 10-year period, many of them did amazingly well. And I am personally long a junior type of gold miner because I have more experience in the industry. If you don't have experience in the industry, you have basic stocks like something like Newmont, which is the largest gold miner, is still trading like 50% lower than it traded before, even though they made big moves, but it's still much lower than it was before. And this is a perfect chart of the gold to the S&P 500 ratio, that they have been selling those stocks for years and years and years. Why? Because we had no inflation. But now inflation is coming back, and if you believe inflation will settle higher than 2% as we keep having inflation go out and come back, go out and come back, this is a perfect environment for those junior gold miners and the regular gold miners to do amazingly well. And you don't really need the gold price to be going up. If you buy a junior gold miner and you know what you're doing, or maybe a GDXJ type of ETF, and these companies can actually use this gold price to actually increase production and create value to shareholders, this can be an amazing return for you as a shareholder. And you could still see the dividends that Newmont is paying, which is 4%, one of the highest in its history. It was paying one as high as 5.5%. We were talking about it in my personal group. But I'm very bullish on the gold mining industry, and I'm not going to sell this stock even if it goes down 50%. And now it's already up 55%, but if it goes up 200%, I'm still not selling the stock, and I'm keeping it for the long term. Now, something else that I personally like very much is the energy stocks. And the problem with the energy stocks, you might feel that you are late to the party because those stocks are making 52-week highs, but they are still a very low percentage of the S&P 500, and you don't need oil to trade at $100. If it trades between $60 to $80, those type of industries can return massive value to you as a shareholder in terms of buybacks and in terms of dividends. Now, I personally don't really like the producers. I am leaning more for type of the royalty type of companies, and I do own a small cap royalty type of stocks that I can't really share on the channel. But this is a stock that I publicly owned before, and now it has pulled back, which is TPL, Texas Pacific Lands. Now, you look at the stock, it may seem expensive, but because they have like 98-99% gross margins and very little risk, because they are the royalty companies, they collect royalties, very high return on invested capital. This is better for my personal taste if we have some type of a cycle, as these companies can endure those cycles much more and afford to do buybacks and actually do dividends for you as a shareholder. So maybe you can join my Patreon and find out which stocks I'm buying, or maybe you could actually go on Google and search for small cap royalty oil companies and do your own research and find something for yourself. But I'm very bullish on this oil type of industry for the future. I believe those stocks maybe are due for a pullback for the oil stocks and for the gold miners. But looking at the next 10-15 year type of horizon with the whole green energy type of deals, I believe those oil stocks are going to continue doing amazingly well like they did in the 70s for my personal opinion. Now, something else that I'm bullish on is, again, things that people need and don't really want. I'm not going to be long cyclical stocks for the next 10, 15 years. Although I have one cyclical stock in my portfolio that I'm keeping mainly because I believe it's too cheap to ignore. But most of my holdings are concentrated for the very long term around industries and type of stuff that people need, absolutely need, and don't really want, like buying groceries, maybe Walmart stock, maybe a lot of people like Costco stock. But I actually talked about a different stock on the channel, which many people don't know, which is BJ's Wholesale Club. It's the same business model as Costco. They even have higher profit margins than Costco. It's around a $9 billion company. Costco is a $200 billion company, pretty close return on invested capital, but BJ's is now trading at 19 times earnings and Costco is trading at 37 times earnings. So this stock is still, for example, under the radar. As the company grows, maybe more and more and more type of investors will actually know about this name, and maybe it gets a multiple expansion where it narrows the multiple between BJ's and Costco. But again, such type of companies are not recommendations, but I believe they can, in the future, over the next 5-10 years, have the stable free cash flow to get a multiple expansion above the tech type of stocks, as they can afford to return value to shareholders much better, and in a very different economic environments where it could be very, very choppy, in my opinion, much better again than other type of the tech names and the growth stocks that were actually doing well, in the past. So those are three industries I'm bullish on, but it's mostly things related to inflation, and it's mostly something that's, stable, something in companies that people need and not just want. This is what I'm bullish on over the next, 10, 15 years. And I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.